As the sun sets on Christmas Day 2025, we find ourselves standing at the precipice of history. The markets are closed, the ticker tape has stopped, the noise of the trading floor has been replaced by an eerie silence. But do not mistake this silence for peace. It is the deep intake of breath before the plunge. The year 2025 was the year of the warning, the cracks in the banks, the glitches in the system, the draining of the vaults. But 2026 will be the year of the consequence. We are transitioning from the age of paper to the age of tangible assets. The prediction we are making today is not based on hope or speculation. It is based on the cold, hard arithmetic of a debt-based system reaching its mathematical terminal velocity. By the time the ball drops to signal the end of 2026, the world economy will be unrecognizable. The US dollar, the king of the last century, is dying, and silver, the forgotten money of the people, is preparing to reclaim its throne at a price target that seems impossible today, but will seem obvious in hindsight: $150 per ounce. To the uninitiated, a price target of $150 sounds like hyperbole. It sounds like a fantasy. But let us strip away the suppression and look at the raw data. In 1980, silver hit $50. If you adjust that 1980 peak for the real rate of inflation, not the fake CPI numbers the government feeds you, but the actual expansion of the money supply, silver would need to be over $600 today, just to match its previous high. We are not calling for $600 yet. We are calling for a conservative $150. This is merely a reversion to the mean. We have printed over $10 trillion in the last 5 years alone. That liquidity is currently trapped in the stock market and the bond market. In 2026, as confidence in government debt collapses, that wall of money will break the dam. It will rush looking for a safe haven. The gold market is too small to hold it all. The crypto market is too volatile. It will flood into the tiny, microscopic silver market. When trillions of dollars chase billions of ounces, the price does not rise linearly. It goes parabolic. $150 is not a ceiling, it is a checkpoint. The catalyst for this explosion is the death of the US dollar. We are witnessing the end of the experiment started in 1971 when Nixon severed the gold link. The US national debt has now crossed the psychological event horizon of $30 trillion. The interest payments on this debt alone are now consuming more of the federal budget than the entire Defense Department. This is a debt spiral. The government has to borrow money just to pay the interest on the money it already borrowed. There are only two ways out of this trap: default or inflate. The United States will never explicitly default. They will choose inflation. In 2026, the Federal Reserve will be forced to print money on a scale that makes the 2020 stimulus look like a rounding error. They will print to save the bond market. They will print to bail out the banks. This flood of new currency will dilute the dollars in your pocket to zero. As the dollar loses purchasing power, the price of everything real, food, energy, and silver, will skyrocket. You have heard the whispers of the Great Reset. 2026 is the year it moves from a conspiracy theory to a lived reality. The central planners know the fiat system is broken. They are not trying to fix it. They are preparing to replace it. Their solution is the central bank digital currency, CBDC. They want to move you from a failing paper currency into a controlled digital token. This transition will be chaotic. They will likely manufacture a crisis, a cyber attack, a banking failure, or a market crash to justify the switch. They will say, "The old dollar is unsafe. Use the new Fed coin." Physical silver is the antidote to this control. It is the only financial asset that is completely private, anonymous, and exists outside the digital grid. In 2026, owning silver will not just be an investment strategy. It will be an act of rebellion against a surveillance state. While the monetary demand explodes, the industrial demand is hitting a brick wall. We are calling this the industrial cliff of 2026. The world governments have mandated a transition to green energy. Solar panels require silver. Electric vehicles require silver. The new boom in artificial intelligence requires massive server farms, which require high-performance silver contacts. The Silver Institute projects that industrial demand alone will consume 100% of global mining production by the middle of 2026. This has never happened before. We are running a structural deficit. When Apple, Samsung, and Tesla realize they cannot get the metal they need to build their products, they will not care about the price. They will bid $100, $150, or $200. They have to. The alternative is shutting down their factories. Industrial demand is price inelastic, and it will provide a floor under the price that the banks cannot smash. The banks can print paper contracts, but they cannot print geology. The reality of the mining sector is grim. We have not discovered a major new silver deposit in over a decade. The ore grades, the amount of silver found in a ton of rock, are collapsing. It takes 10 years to bring a new mine online. Even if the price hits $150 tomorrow, no new supply can hit the market until 2035. We are facing a decade of scarcity. We are consuming the Earth's inventory faster than we can replenish it. For the last 4 years, we have filled the gap by draining the above-ground vaults. Those vaults are now empty. In 2026, the buffer is gone. The market will have to balance itself purely on price, and the price required to balance this equation is significantly higher than where we are today. Geopolitically, 2026 will be the year the East formally challenges the West. The BRICS alliance, Brazil, Russia, India, China, South Africa, has been accumulating gold and silver voraciously. They are building a new trade settlement system to bypass the SWIFT system and the US dollar. Rumors are circulating that in 2026, they will announce a new currency unit backed by a basket of commodities with gold and silver at the core. If China and Russia demand payment for their goods in real money instead of US treasuries, the demand for the dollar evaporates overnight. Trillions of unwanted dollars held overseas will flood back into the United States, triggering hyperinflation. In this scenario, silver becomes not just a commodity, but a global currency once again. The mechanism of price suppression, the COMEX futures market, is on its deathbed. We saw the tremors this week with the trading halts. In 2026, the earthquake hits. The current leverage ratio is absurd. For every ounce of physical silver in the registered vaults, there are hundreds of paper claims. As the price rises and confidence falls, these paper holders will stand for delivery. They will ask for their metal. The exchange will simply not have it. We predict that in 2026, the COMEX will declare force majeure and settle contracts in cash. This will be the moment of decoupling. The paper price might show $50, but the physical price for a coin in your hand will be $150. The paper market will become irrelevant, a museum of a failed system. We must also consider human psychology. Right now, silver is a contrarian trade. It is unloved and ignored by the masses. In 2026, it will become a mania. When silver breaks its all-time high of 50